For more than 30 years, Sarah ignored almost everything. She ignored market predictions. She ignored financial television. She ignored economic forecasts. She ignored headlines that claimed the market was about to crash. And she ignored headlines that promised incredible opportunities. Most people thought she was making a mistake. By the time she retired, the school teacher had quietly become a millionaire. Not because she was lucky, not because she inherited money, not because she discovered some secret investment strategy. In fact, the reason she became wealthy was almost the exact opposite of what most people believe. And once you understand what happened, you may never look at investing the same way again. Sarah spent most of her life teaching 5th grade. She wasn't a CEO. She wasn't a hedge fund manager. She didn't run a successful business. Her salary was modest, especially compared to many of the people around her. There were doctors in her neighborhood, lawyers, business owners, corporate executives. Most of them earned significantly more money than she did. And yet, many of those same people retired with less wealth. How is that possible? How could a school teacher quietly outperform people with much higher incomes? The answer begins with a mistake that millions of people make every day. A mistake that feels intelligent. A mistake that feels responsible. A mistake that often destroys long-term wealth. The mistake is paying too much attention. Most people believe successful investing requires constant information. Financial news, economic reports, expert predictions, market updates, breaking news alerts. The assumption seems logical. More information should lead to better decisions, right? That's what Sarah believed when she first started investing. In her 20s, she followed the news closely. Every market decline felt important. Every prediction felt urgent. Every headline demanded attention. And every headline seemed designed to trigger an emotional response. Fear, excitement, optimism, panic. The market was always about to crash, or about to soar, or about to enter a new era. There was always a reason to do something. Then something unexpected happened. Sarah began noticing a pattern. The experts rarely agreed. One predicted disaster. Another predicted opportunity. One warned investors to sell. Another insisted they buy. The more information she consumed, the more confused she became. And that's when she made a decision that would change her financial future. She stopped trying to predict the future. Instead, she created a simple plan. Every month, regardless of market conditions, she invested a portion of her paycheck. Not occasionally. Not when she felt confident. Not when experts agreed. Every month. Again and again. Year after year. At first, the results seemed boring. There were no dramatic gains. No exciting stories. No overnight success. Just steady contributions. Month after month. Most people never realize this. The greatest wealth-building strategy often looks incredibly boring. And that's exactly why so few people follow it. The real challenge isn't understanding investing. The real challenge is staying consistent when emotions tell you to stop. Sarah faced the same fears as everyone else. She invested during recessions, during market crashes, during financial crises. And every time, the headlines became louder. Every crisis felt different. Every downturn felt permanent. Every expert seemed certain. The world was changing. The market would never recover. This time was different. At least that's what people said. But then something unexpected happened. The market recovered. Again, and again, and again. Years passed. New crises arrived. New predictions appeared. New experts emerged. The headlines changed. The fear remained. And through all of it, Sarah continued following her plan. Most investors underestimate the psychological challenge of long-term investing. Because the greatest enemy isn't the market. It's uncertainty. Human beings crave certainty. We want reassurance. We want predictions. We want someone to tell us what happens next. But investing doesn't work that way. The future is unknowable. And that's where most people struggle. They mistake activity for progress. They believe doing something feels safer than doing nothing. So they buy, they sell, they react, they chase trends, they respond to fear. And without realizing it, they slowly sabotage their own results. The real surprise came later. One afternoon, Sarah attended a retirement seminar. The speaker asked a simple question. How many of you believe successful investing requires intelligence? Almost every hand went up. Then he asked a second question. How many of you believe successful investing requires patience? Far fewer hands appeared. That moment stayed with her, because it revealed something profound. Most people believe wealth is built through superior knowledge. In reality, wealth is often built through superior behavior, and behavior is much harder to master. The smartest person in the room can panic during a market crash. The most educated investor can make emotional decisions. The most experienced professional can abandon a long-term plan. Knowledge matters, but behavior often matters more. Years later, Sarah encountered another lesson. One of her former students became a successful financial advisor. During lunch, he asked her a question. "What's the best investment decision you ever made?" Sarah thought for a moment, then smiled. "It wasn't an investment decision." The advisor looked confused. "What do you mean?" She replied, "The best decision I ever made was deciding not to listen to all the noise." That answer surprised him, but it perfectly captured her experience. The headlines weren't helping her. The predictions weren't helping her. The constant information wasn't helping her. In many cases, it was making things worse. Because information doesn't always create clarity. Sometimes it creates anxiety, and anxiety often leads to poor decisions. That's where the story takes an unexpected turn. Most people think investing is about markets, stocks, funds, returns, numbers. But beneath all of those things lies something much deeper. Psychology. The ability to remain calm when others panic. The ability to remain patient when others chase excitement. The ability to stay committed to a long-term plan while the world demands immediate action. Those abilities are incredibly rare and incredibly valuable. As the years passed, Sarah's investments continued growing. Not every year, not every month, but over time, slowly, consistently, almost invisibly. And that's what made the process so powerful. Because compounding doesn't feel dramatic. At first, the early years seem insignificant. Progress appears slow. The results seem disappointing. Many people quit during this stage. They become impatient. They chase something faster, something more exciting, something that promises extraordinary returns. Most never realize what they're giving up, because the magic of compounding appears later, much later. Then one day, the numbers begin to accelerate. The growth becomes visible. The years of patience finally start producing meaningful results. And suddenly, what once seemed slow appears extraordinary. The real surprise wasn't how much money Sarah accumulated. The real surprise was how little stress she experienced compared to many other investors. She wasn't constantly monitoring markets. She wasn't reacting to headlines. She wasn't trying to predict the future. Instead, she spent her time living her life. Teaching, traveling, spending time with family, building memories, while her investments quietly worked in the background. And that's when the biggest lesson finally became clear. The goal of investing isn't to become obsessed with money. The goal is to create freedom. Freedom from financial stress. Freedom from constant worry. Freedom to make choices based on values rather than necessity. Freedom to retire on your own terms. Years later, when Sarah officially retired, people were surprised. Not because she retired, because of how comfortable her retirement looked. Many assumed she had inherited money. Others assumed she had made extraordinary investments. Neither was true. She simply did something most people struggle to do. She stayed the course. While everyone else chased certainty, she accepted uncertainty. While everyone else chased excitement, she embraced patience. While everyone else listened to noise, she focused on what mattered. And that's when the final twist arrived. Looking back, Sarah realized something surprising. Her greatest advantage was never knowledge. It wasn't intelligence. It wasn't timing. It wasn't luck. Her greatest advantage was the ability to ignore distractions, the ability to ignore fear, the ability to ignore predictions, the ability to ignore noise. Because the world constantly rewards attention, but wealth often rewards patience. And those two things are rarely the same. Today, millions of people continue searching for the perfect investment, the perfect prediction, the perfect strategy, the perfect moment to begin. Meanwhile, some of the most successful investors quietly follow a much simpler path. They invest consistently. They remain patient. They think long-term. And they refuse to let short-term noise control long-term decisions. Perhaps that's the greatest investing lesson of all. The people who build lasting wealth are not always the smartest. They're often the most disciplined, the most patient, the most consistent. Because financial freedom rarely belongs to those who predict the future. It belongs to those who prepare for it. And sometimes, the most powerful thing an investor can do is ignore what everyone else is talking about.